This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, September 5th, 2017. Last week, commodity prices and economic reports were mixed. U.S. steel production fell slightly, remaining ahead of last year, but slightly below 2 years ago. Oil fell about 50 cents to $47.35. Low prices are slowing energy-related jobs growth as the oil rig count stayed steady at 759. But low prices remain a positive for other parts of the economy. Iron ore was flat at $76.50 per metric ton. Recent increases have taken scrap and steel prices up with it in the recent months. Scrap ferrous prices remain level, but all indications are that prices will be higher in September as slow economic growth continues. Hot-dip galvanized steel remained higher at $9.50 a ton, up more than 50% in the past 18 months on good demand and higher raw material prices. Stainless 304 scrap prices remain steady on this chart at 29.5 cents, but true transaction prices have climbed about 3 cents. Copper rose 6 cents to $3.12 on good demand and a weaker dollar, as transaction spreads rose yet again. Copper was up 3 cents Monday at $3.15. The 5-year chart shows we are near 3-year highs on copper. Copper inventories fell slightly, and that's putting upward pressure on prices. In recent weeks, China has implemented significant import restrictions on items like scrap insulated wire and electric motors. This is a major issue that will affect recyclers and prices unless it is resolved quickly. Aluminum rose 2 cents, ending at a new multi-year high of 96 cents. This 4.5-year high may not hold because some of this price increase is being driven by speculation, not demand. Aluminum inventories rose a bit, but they actually remain near about the 10-year lows on solid demand and in transportation and construction. China's Caxin manufacturing index rose to 51.6, the third straight month of expansion, as new orders surged to over a 3-year high, and new orders for exports increased the most since 2010. The U.S. manufacturing index also rose, and that's 58.8, which was the highest reading since April 2011, boosted by a rise in production, employment, and inventories, with the plastics and rubber industries followed by electrical equipment and appliances showing the most growth. U.S. GDP increased at 3% in the second quarter, the highest growth since early 2015. Personal consumption and non-residential fixed investment were larger than previously estimated. Non-farm payrolls increased by a good but lower than expected 156,000. Manufacturing rose a strong 36,000, now up 156,000 since the recent low of November 2016. Construction jobs grew as well, keeping upward pressure on commodity prices. The bad news is that while job growth is good, when looking at a 5-year trend, we see the growth rate of new jobs is slowing. The unemployment rate rose slightly to 4.4%, remaining near the 16-year low of about 4.3%. The low rate means it is tough to find workers due to many have jobs. This chart looks almost the same, yet it's very different. Look at the numbers on the left. This is people that really want to work but have stopped looking for work, and people that have part-time jobs but want full-time jobs. Their rate has dropped from over 17% in 2009 to now 8.6. So 8.6 is higher than 4.4. August sales of U.S. vehicles fell to an annual rate of 16.14 million, with vehicle manufacturing in the U.S. down, while vehicle manufacturing in Mexico is actually up significantly. This is the last reminder that September 14th, next Thursday, is BENLEE's 3rd annual Roll-Off and Lugger Free Safety Training and Operations Forum, with hands-on operational tips and updates. There are still a handful of spots available, so call Tiffany at BENLEE to reserve a spot. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.